from a penny stock to billions of dollars in valuation before tumbling down to more than 70% from its peak. Vaxart has been through a hell of a roller coaster recently. If you're watching this video, you probably either have Vaxart shares and left holding the bag after the recent collapse, or you're wondering if the timing is right to buy more shares. Please watch this video until the end, because we will cover the recent events around the company, the key elements that will determine your overall decisions on if you should buy Vaxart shares or not. The company was a penny stock not that long ago, but its share price really started to take off since the pandemic because a lot of people wanted to speculate on its vaccine. Of course, now you know what happened next. The expectation was built up and led to this massive disappointment in February, and since then the stock has been trading around $6. Alright, look, I know that I may have a different opinion about the company compared to most other people who bought this stock, so I might as well just say it beforehand. I initially believed that this company has value not just because of the pandemic, but because of the oral vaccine and its potential to develop the entire industry. I mean, just think about it. Would you really go to a clinic to get your vaccine if you can get it in your mailbox? But that's not the main reason why the stock has been so popular over the past few weeks though. I would say that most people who bought the stock went ahead because they wanted to speculate on the vaccine. And once the phase 1 results were perceived as negative, they immediately decided to liquidate their positions. And that was the end of it. So, do I believe that the company has true potentials? Yeah, I do. I think that if we give it time, we will really get our vaccines mailed to us in a small pill, instead of waiting in queues in front of hospitals. But the problem right now is that the stock is a bit a victim of its own success, and more importantly, the victim of its miscommunication regarding their phase 1 test results. We can go back and forth about which antibodies is the most efficient against the virus, but if I'm being really honest, this is one of those you can be 100% right and 100% fired type of scenarios. Another unfortunate reality that we have to deal with is that Vaxart doesn't have that much external validation at the moment. This is crucial in the company's valuation because remember how Bionano Genomics shares really just took off after a Science magazine and ARK Invest mentioned its research results and accomplishments back in the days. In other words, at the moment, we are really speculating on the speculation about Vaxart. The success of our trades massively depend on how many people are willing to buy the stocks, and not because of the fundamentals, because there's really not that much to look at the moment, but because just like us, they want to speculate and gamble on some potentially disruptive research from this company, and they want to be among the first to benefit from it. Of course, that is the case for most growth stocks that we have covered over time. Frankly, it shouldn't be that surprising for us to speculate on speculation, but it has become somewhat of an uncomfortable truth when we realize how far we've been running just on empty stomach. But see, that's not all, because it's not just the speculation. It's also the factor of uncertainty in the mix, and this time, the uncertainty can really hurt. Over the next couple of months, Vaxart's major partner, the pharmaceutical company Janssen, will decide if it will commercialize the flu vaccine for it. If Janssen doesn't want to help Vaxart in this, the consequences can be extremely severe for Vaxart. It can send its share price into the abyss, maybe back to its penny stock positions when all the hype even started. So in front of all these information, the question is, what should we do? Let's start by saying that this stock is not for the faint of heart. Actually, the entire market at the moment is not for the faint of heart. Like, if you think that you can go all in on those highly speculative stocks and make money hand over fist, like you think is the case for some financial YouTubers, then I believe that you should rethink about trading in this current context. The market is going through a cycle of self-questioning right now. It's asking itself, why have we thought that stocks such as Fubo, NIO, Tesla are going to take over the world? How come these stocks skyrocketed exactly when the economy entered into a catastrophic lockdown and recession? I think that the real answer to these questions is the one and the same, because we want to keep dancing as long as there's music. And there were some pretty dope concerts with those stocks, like NIO, Tesla, Fubo, Bionano, Workhorse, and the stock that we're talking about, Vaxart. The music has been great throughout 2020 because everyone is pitching in. But now it's almost like the participants are running out of passion or running out of whatever that was fueling them over the past 12 months. I mean, who knows? Maybe they just realized that the world needs to make some real tough choices as it tries to reopen the economies. Regardless of the philosophical reason behind it, the observable reality is that there is a general mood change in the market. People are starting to question more and more about if their investment is justified. Okay, so now we've covered what's been going on. Let's talk about what you should do about all this. Essentially, I think that the current price level can be a good entry point to build up a position if you think that it's going to grow up into $1 billion company within a few months, either because the vaccine will prove its efficiency or because of some other external validation. But beyond this, I would say that there is a second layer of considerations in all this. And that would be the potential collapse of its current price level back to its penny stock territories. There is no fundamental to back this thesis, just a statistical one. Essentially, the lower the company value goes, the less you really have to lose. And this philosophy has guided some of the big institutional investors like Vanguard, BlackRock, and Goldman Sachs to invest in Vaxart when it was really just a penny stock. I don't think that it's really because they believed in the potential of the company itself, but they believed that the valuation of the company at the time was low enough for them to profit no matter what. By the way, it's okay if you find this logic bizarre and counterintuitive, but if you really think about it, if a collapse happens without you having a large position in the stock, all that means is that your cost basis will be lower and your profit potential higher. And that is why it would be crucial to keep your risk and position size in check. This is a long-term game. I don't think that the current market allows us to really have any success in the day trading. So you shouldn't just rely on them to structure your trade. I believe that your position should take into consideration the real possibility that the stock may take another nosedive in a few months because the vaccine against the pandemic maybe doesn't work. That nosedive in by itself isn't necessarily catastrophic for you as long as you control your risk well. So my recommendation is to limit your exposure to 1 to 2% of your portfolio and save at least 60% of your allocation for later this year in case the stock goes much lower. Thank you for watching. If you like my content, please like, comment, and subscribe to my channel.